Steve here. Eyes on the screen. It's 6:15 a.m. and the tape is screaming. We're 90 minutes out from the most dangerous red folder event of the year. And if you think this ceasefire is going to save your long positions, you haven't been paying attention. The morning ledger. Opening tape. The pre-market is in a high-velocity squeeze. We're seeing a sell the news reaction to the ceasefire as the physical reality of the strait sets in. Asset price, level morning. Trend S&P 500, SPX, 668.25.80. Testing resistance, gold, GC, 4,756.40. Softening, 0.14%. Brent crude, BZ, 97.57 rebounding, loss 1.72%. Bitcoin, BTC, 71,817.79, holding 71K. The SPX is fighting a war at 68.25, pinned right against the 50-day exponential moving average. Brent crude is clawing back toward $98 as the big desks realize that ceasefire doesn't mean open for business. Gold is sitting heavy near 47.50, while Bitcoin is the only thing showing a spine, clinging to the 71,000 level. The red folder, the CPI reckoning. Check your charts and set your stops. At 8:30 a.m. Eastern, the Consumer Price Index hits the wire. The street is bracing for a total blowout. Analysts are projecting headline inflation to explode to 3.4%, with a month-over-month jump of 0.9%. That would be the largest monthly spike in 4 years. If this number comes in hot, it proves the Iran war energy shock is structural, not temporary. The Fed will be trapped. If the algorithms catch a whiff of 3.5 or higher, that 200-day simple moving average at 66.50 on the SPX is going to get tested before the lunch hour. Geopolitical ledger. The Islamabad standoff. The ceasefire mediated by Pakistan is already fraying at the edges. While the headlines say peace, the Abu Dhabi National Oil Company just confirmed the Strait of Hormuz is not open. Over 200 loaded tankers are sitting in a parking lot because Iran is demanding permission and political leverage for passage. President Trump isn't playing games. He posted late last night that U.S. forces stay loaded up until a real agreement is reached. Today is officially Power Plant Day. The ultimatum is clear. If the Islamabad talks this weekend don't result in a full, unconditional reopening of the strait, the strikes on Iran's domestic energy infrastructure move from threat to execution. Meanwhile, Israel is still pounding Lebanon. This isn't a resolution. It's a tactical pause in a cage match. Sentiment analysis. Bullish versus bearish. The bearish case. The ceasefire is a mirage. If the strait remains restricted by tolls or Iranian security checks, 5 million barrels a day stay offline. Technically, the SPX is still trapped under its 50-day IEMA. Until we reclaim that line with volume, every pop is a sell the rib opportunity. The bullish case. The bulls are betting on a total capitulation in Islamabad. If the strait reopens fully, the war premium in oil vanishes and we squeeze towards 7,100. But with CPI hitting in an hour, the bulls are looking very thin. My advice? Capital preservation is the only trade that matters today. Respect the 200 SMA. 66.50 is your line in the sand. If we lose that on a hot CPI print, get out of the way. Watch the 50 EMA. We are rejected at 6,800. No long entries until we clear that hurdle. Oil volatility. Stay out of the way of Brent until it decides if 95 is a floor or a trap. Small sizes, tight stops, and don't trust the first move after the 8:30 data drop. The ledger doesn't wait for latecomers. Stay disciplined, watch your averages, and I'll see you on the other side. This is Steve.